Hello guys, this is Sky Network. Um, I teach people about cryptocurrency, forex, and how to make money online. So, if you are new to this channel, kindly press the subscribe button and kindly subscribe to this channel for more updates. And also, I want to let you guys know that. Um, if you are doing any business online, any online business, make sure you invest or do anything at your own risk. All right. So, and always do your own research before you invest any money into anything. Make sure you always do your own research, and kindly note that this channel is not in any way a financial advisor. So always do your own research, all right, before you do anything. So um, kindly note that I'm not a financial advisor. So and you will find the Telegram channel on the description. Kindly subscribe. There are things we post on our Telegram channel that we don't post on here, so kindly subscribe to our Telegram channel, and you will find more useful stuff there. So this is synthetic indices, and today we are going to be talking about price action. But first of all, let me show you some things. This is Crash 1000. I believe I've taught you guys of. Let me repeat again from let me repeat a little bit of some stuff. Now I told you guys that when this line, now there is something on your phone, you see I'm using iPhone, so you see a plus sign and F sign and the last one. If you are using an Android, all you have to do is to tap on your screen. When you tap on your screen, something like a blue stuff rolling, that is rolling, will show up. So that thing that is turning circle in blue, that's where you will find your time frame, and after your time frame you will see this last icon on it. So if you tap on it like this, you are going to see all the symbols here you can use to draw. So let me tap on this finger, for instance. So we said if this if a spike occur like this, and you if a spike occur like this, and if a spike occur like this, and this blue line down here touches down here, and you look at this level 10 and is on the level 10, it means you can enter the market. So when you enter, you hold up until this, either this tiny red line crosses this green thick line, or this blue line and this purple line crosses again, which is this level, which is either this level, yeah, this level here. That's what you are seeing there, this level, or that's if any of these conditions are met, or this purple crosses this blue line down here. That is when you should exit the market. Then after exiting like that, you have to count like 1 or 2 candles, then you can enter again. Then when you enter again, you hold up until these 2 lines down here, which is the purple and the blue, crosses each other or about to cross again, which is somewhere here. So supposing you enter this, you are supposed to leave the market as somewhere here, which is somewhere here, I guess. Yeah, somewhere here. So you can see the descriptions somewhere here. Then where is where can we find the overbought level? Now the overbought level is, you see this blue line up there, this 90 level is actually the overbought level. So once the market is trying to approach this 90 level, you should quickly run away. That's quickly exit the market, because once it gets to this 90 level, it means that is danger. So anything you are doing on this 90 level, you are trying to get profit, you are just on your own, or you are taking too much risk, so you have to exit. You understand? So that's how that is. Let me delete this so I can then the oversold level, we are going to talk about that in boom. So now there is something called breakout. Now I'll show you what a breakout is. A breakout is, now while you are doing this, you are trading this market, you have to take note of resistance levels. What are resistance levels? I know some of you, the students, already know what a resistance level is. The point at which the market got to and a spike occurred, or it pulls backward, that is the resistance level. So whenever you are in a market, you are trading, and this thing moving is getting to the resistance level, you don't allow it to get to that resistance level, because if it gets there, they will get you. So nothing. 337,607 naira. So before you get to the resistance level, which is this point, the market got here, it pulled back, it got here, it pulled back, it got here, it pulled back. So if the market is approaching that resistance level, just before it gets to that resistance level, you have to leave and allow it to pass that resistance level with like 2 candlesticks or even 3 candlesticks, that you are very sure nothing is going to come down again before, if there is any chance for you to enter, before you can enter. So if you are trading this market and you are not taking note of resistance levels, you will just be losing anyhow. So now let me show you what a breakout is. Okay, so let's say a market has been going to, it has gotten to a particular place, it has been going to a particular place and has been pulling back continuously. So the moment the market finally passes that point, because there is something there that is stopping the market from going going forward. So immediately the market finally breaks that yoke and passes that point it's getting to and pulling back, that is a breakout. So let me show you what a breakout is. Now okay, look at let me show you what a breakout is. So let's say for instance, look at this. Okay, let me show you something here. Market got here, a pullback. Okay, here a pullback, this place. It got here, which is this point, a pullback. It went just a little bit and pull back again, went a little bit and pull back again. Now the third time the market past this very point, and you notice that on this other place there is no more any resistance there. So the market passes this place. Look at what happened. This is a breakout. It went all the way up. But when you are trading, one thing is that you don't have to be greedy, because if you are greedy, you want to follow the market to where it's actually heading. Sometimes you can run at a big loss. So you take what you can take and get out. So that is the idea. So don't be greedy. So that's what a breakout is. I believe with time you will understand. So now let me show you the price action. Is this, you are reading the market, that you now know, okay, look at this example now where the market is now currently. You know that it touches, this blue line has touched this level 10 and you have entered. So it's now going, you are waiting for this, either this blue and purple to come to meet themselves, or this red tiny line to cross any of these candles, then you exit. Now you are reading the direction the market is going. You already know the direction. Now how do you enter a TP into this market? Now supposing you are to enter a TP, you have to measure the amount of profit or candlesticks that you want to take. So you don't actually want the market, you don't actually want any of these things to cross. So what you do is this. Now you tap on this plus sign, then you measure like this. Let's say you see this number that is showing now. Maybe this is where we want to set our TP. So 6940 dot. Okay, another spike has just occurred. So let's check for a market where maybe we can enter a TP. I think the spike is still okay. So for instance, maybe this is the point we want the market to get to and take our profit for us. Let's say 32, 52, 53. So this is the number, this number now, this particular number on this stuff, 32, let's say 32, 55, 23, 32, 55. So we come to trade, then we tap on the plus sign, 32 dot 55.23. So we enter buy market, we enter another position, 32 55.23. we enter buy market. Now look at our buy market. Now what we have succeeded in doing is that we have told the market that when it gets to this place where this number is, we are not interested in getting to where the market will get to. Even if we are going to gain $10,000 there, we are not interested in that. So we just want to take a little profit. Then we can open like 4 positions if we like. So now what we've succeeded in doing is we have told the market that when it gets to this particular place where this number is, it should close the market and take the profit we have made for us. And if our prediction is quite right, there is nothing that will stop us from making that profit. So look at what we are making now, for instance. Look at. So this is how. Now let's go to boom. We are on crash 1000. Let's go to boom 1000 and check if there is a favorable market there. So we tap and go to boom 1000. So this is boom 1000. Now how do we check? I told you guys that this is price action we are using. So, and we are using TP now to avoid us from getting some kind of losses. So now how do we read the market? We are reading this market using the opposite of what we did in crash 1000 to read the market here. So now once a spike occurred and this blue line touches level 90 on boom, it means we can enter, which means this spike, this last one already occurred. and now the market is in this particular position now. This position where I just drew an icon now, that's where it is now. Right now we can still enter and take like 2 candlesticks. So what we are going to do, we select, we click on that plus sign again. Remember, in boom we are selling, not buying. So we put this stuff here, which is like 2 candlesticks. We put this stuff here, which is like 2 candlesticks. Now 61, 69, 29. Now we go to trade, click here. Let me check back. 61, 69, 29. 61.6929. So we click buy, then we click on 61, 69, 29. We click sell. So what we are, you see what happened right here. The crash has already gotten to that price we set the TP at, and it has chopped it. It has already secured that profit for us. So now we are in boom 1000. We did the same thing. So in boom 1000, if a spike occurred up, the spike is the green one in boom, not the red one. The red one is the tick, is the candlestick in boom. So note this difference. Then now we can say, okay, like this. Let's check crash 500 to see if there is a buy opportunity here. Now a series of spikes has occurred. So what is the condition of the market now? The market condition is still going down. So another spike might likely to happen here, because there have been series of spikes happening from this point down to here. So approximately another spike might just occur here. So we can't enter this market now. We can't even take even 1 candlestick. We can't. So now let's check boom 500. Boom 500 has already reached level 10. Look at the blue line down here is at level 10. So we can't enter. It's just a bad market there. Then let's check crash 300. So remember, I told you guys that crash 300 is a very volatile market. So if you are putting your TP, you can just count just 1 or 2 candlesticks. That's all. Don't take more than that, because it can reverse anytime. So right now, fine, it didn't touch this. The blue line didn't touch this level 10, but the market is at uptrend, so we can take like 1 or 2 candlesticks. So let's see, we put our line here now. Okay, let's say 66,773. So we'll go to trade 66,773, buy 66.773, we buy. Okay, now you will notice that the previous market we entered from boom 1000, the market got to that point that we set our TP in, and it has already taken the profit by itself without us even looking at the market. So that's the most beautiful thing. So if your calculations are right, you will always get this. You will use this price action to flip your account to any amount that you like, but you must be very calculative. That is just it. So now we've done on crash 300. Let's go to boom 300 and see if there is any chance there. Boom 300. Okay, boom 300, there is no chance here. This market is not in a good shape. is not in a good position at all. But anytime any spike happens and the spike is short, it means that there is no strength for the market for a big spike to happen, so the market will surely continue. So we can say, let's say we can take like one candlestick here on this boom 300. So let's just put 24,231. So we come here 24.231, we sell 24.231, we sell. So if you can look, if we check our history, you will see that the crash 300, we enter two position. The market got to that point at $68.30, $61.84, and it automatically collected the profit and closed the market for us. So all the ones we've done so far, if you look at them, you see that we have gained a lot. So this is how to use price action. You flip between these four different markets: crash 1000, boom 1000, crash 500, boom 500, crash 300, and boom 300. But you must be very calculative. Like I said, if you are not sure of your predictions, it will go against you. So if you notice, the boom 300 we just entered has just all the profit has been claimed by themselves. If you look at it, you see that all the profits have been claimed by themselves. So now let's go back to crash 1000 and see what is going on there. Okay, the market was here. Okay, we can take like two candlestick here on crash 1000. Let's see. Okay, let's say 362963, 362963, buy 36.2963, buy. So that's two positions. Okay, now let's check boom 1000 again. We might just be able to take one candlestick, just one candlestick, 55 85 20. Okay, 55 85 20, sell 55 85 20, sell. Okay, now we've done that. Now let's check on crash 500. Crash 500 has just crossed. I don't trust this yet. This market has been a very bad market, so we must wait until. Okay, we can take maybe like one candlestick here. So let's just say 59,792. 59.792. $59.792. So if you look at this, okay, it has. Okay, if you look at this, you see that the last one we did, which is boom 1000, the market got there and it took the profit for us. And if you look at this very well, you see that the crash 1000 went against us. Look at, let's check and see. You see that a spike just occurred, but I have to leave it. It will retrace, because if your equity is big and your lot size is small, definitely it will retrace. But it can take a long time, but the market will retrace back. So this is how to use price action to be checking out the market. But you have to be entering TP, which is the take profit, so that because in the process of you flipping different market, there is no way you can do that unless you set your TP so that you don't need to be monitoring the market. When it gets to that price, it will definitely take it for you. So that's another thing you have to take note of. So this is how to, I believe by now you understand how to use price action to trade market. So you guys that are learning, make sure you study this, do it on your own before the next class. Is your assignment. So see you in the next video. If you got any questions, you can drop it in the comment section, or you can drop it in the forum. Bye for now.